Hi, this is Jay and Renee with our June 2019 Economic Update. As always, we'll discuss some of the headlines that influenced markets last month and provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement.
The financial landscape. As we indicated last month, investors have been willing to take on more risk in 2019, a major reversal from the last quarter 2018 when investors were very risk adverse. This appetite for risk shifted in May, however, primarily based on fears around trade conflicts. We feel those concerns have been overblown by the media, given that the U.S. has enormous leverage with China for two reasons: our trade deficit with China and the ability of firms to shift supply chains toward alternatives like Vietnam, Mexico, and India. The economists we follow don't currently see signs of weaknesses in the economy, and they put the odds of a recession in the next year low. They do acknowledge that concerns over the trade conflict could return us to more of a 2% plow horse growth.
The stock market. The S&P 500 index closed May at 2752.06, down from its all-time high of 2945.83 on April 30th. The index posted a total return of negative 6.35%, with only one of the 11 major sectors up on a total return basis. The top performer was real estate, up 1.16%, while energy, down 11.14%, had the worst showing. Year to date through May, the index posted a total return of 10.73%, with all 11 sectors in the positive. For the year, real estate has been the top sector, up 18.34%, and healthcare continues to be the worst performing sector, up 1.34%. Surprisingly, large cap stocks have outperformed small and mid cap stocks. One might think investors would find small and mid cap companies more desirable, since their business models tend to be more aligned with the U.S. economy rather than the global economy, but that hasn't been the case. Many investors have viewed large caps as a safe haven, like government bonds.
The takeaway. Despite the positive showing by the U.S. stock market to date in 2019, retail investors continue to pull their money out of stock funds, as they have for much of the past decade. No matter how many shocks to the system, equities have proven their resiliency over time. Think about this: the wealthiest 1% in America currently own 50% of all household equities, up from 39% in the late 1980s.
That's it for this month's update. This is Jay and Renee with Advanced Wealth Strategies, and this has been your June 2019 Economic Update. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please call us at 704-765-3653.